morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, February 27th. All right, guys. Well, the song remains the same yet again. 4 days in a row, the market tried to sell off, and buyers have come in and pushed the market at or near its opening range. So we've had 4 days of doing absolutely nothing. 3 days prior to that doing absolutely nothing other than a gap, and that's what the trend has been. Although the prevailing trend is up, we have been sideways consolidating. One pop up, we sideways consolidate yet again. So basically, if you're indexing, you're not doing so good, or you're not doing it really much of anything. It's been really dismal since July. If you're trading the ES, the NQ, or any of the ETFs for that matter, very, very quiet. Obviously, aside from the Trump rally, and even then, when they gap up every day, and then your high probability trade is really out the window, it's very difficult. However, now we are looking for at one point a market to either capitulate to the upside, right, meaning a blow off top, or start a retracement rally back. A retracement back down to certain levels, which I'll show you, and then look for one more pop up higher, or that retracement that we get, the pullback, turns into a full blown correction. No one knows when it's going to happen. There's a chock full of data coming out this week you have to pay attention to. Also, very big. The State of the Union address, Donald Trump is going to address the union on Tuesday night. That's going to be very, very important, okay? This whole market that we've seen right now is totally driven on sentiment. You could throw the fundamentals out the window. You could throw the technicals out the window. And what do I mean by that? Well, Mark, aren't you a technical analyst, trader? Yes, I am. However, when you have reading of overbought measures, RSI at 98, stochastics reading at highs haven't seen in 20 years, and the market just refuses to go down. It's everyone piling in to this top right now that's been forming, and that's where I know and I see that the markets are in a topping phase. I've seen this before. I've seen this many times in other crashes. I've studied it. I just don't know when the timing is, and no one does. And believe me, if somebody says they do, I would run far away from them, because they're not telling you the truth. You cannot. There's no one can time a top. Very, very difficult to do. And if there may be 1% out of the whole trading community. But there are lots and lots and lots of signs. This means nothing to me, even though we've pulled back and then the markets have rallied again. What that tells me is that they, meaning the powers of B who trade the market, retail, continues to come in and buy the dip until it hurts. And that's what they're going to do. Until it starts to hurt, they're going to buy the dip. And then when it does hurt, they're going to trap all the buyers at the top. The first ones to go are going to be the guys taking profits. And then you're going to have your short sellers. And the last ones to go are going to be retail, which will capitulate the bottom, as they did capitulating the top. Okay, so don't be part of that statistics. Start looking to protect yourself. The longer-term wealth guys that are managing a wealth management portfolio, or your 401k, be constructive. Their puts are very, very cheap. Start looking to buy puts and hedge your portfolio if you're not looking to take profits. Okay, that's all I can tell you. I'm very bullish, but I'm not bullish up here at these highs. I would never even think about looking to buy anything if I were holding anything. UUP. Here's the dollar starting to hold here, this trend line. We need to get back above this swing high of 26.28, and then I think we will challenge the highs here in the UUP. Other than that, quiet. TLT, nothing going on here, guys. Although we did get a couple of upticks during the course of the last week's trading day. Again, flight to safety. We talked about that. The utilities, the REITs, right? Bonds, gold actually started to rally really hard. Look at gold. Gold actually did very, very well the last few days, gapping up, creating this gravestone this doji. And this isn't something that it's other than inflationary measures. I get it. It's a safe haven trade here. Okay. However, gold and the miners are starting to diverge a little bit. Now it's still early, but you got to be careful, because if you look at the miners, which they lead first, okay, they're starting to break down a little bit here. Then they did not have a great last 3 days, which the gold did, okay? Doesn't mean it's still within a nice bull flag and within our inverted head and shoulders. So right now, nothing to worry about. But if we break below the proprietary price channels, our TMT price channels, and start to really break down, well, then you're gonna have something that you need to really pay attention to if you're looking to get long, or if you are long gold, because once the miners break down, gold will follow eventually. Okay. Spiders, here's that ridiculous chart, up around 2.5%, 2.5% from the 21 daily. All right, ridiculous. Would not even think about buying anything up here, guys. And even if we win a little further, the ramifications for a pullback are going to be much greater. Okay, you won't even have time to get out of your long trade, and if you do, you're going to get out with a substantial loss. So let's be prudent, right? Be prudent in your trading, in your thinking. Don't let this overcrowded long trade skew your way of thinking based on your trading style and of course your account style. Okay, next 60-minute, wanted to show you guys, we talked about riding the rail here. 4 days of absolutely nothing other than the fact that we gapped down, they bought the dip, gapped down, bought the dip. So what's happening? I've showed this to you last week. We're riding the rail here right now. Could this happen, go all the way to 240? I'm not sure, but it does look like that. Now we're looking for a couple of scenarios for the new guys. Obviously, one would be right down to around 232. Big blow off top and then back down again. Okay, this is just, I have no idea where it would stop, but that's the one case scenario. The other one would be to just kind of ride those rails, ride that upper end, right? Maybe a little shallow dip, buy and make new highs. Nice shallow dip, buy and make new highs, and then one big blow off top, lots of volume, and then slam right back down again. So those are the two scenarios that I'm watching. Looks like right now riding the upper end of this trend line seems to be playing out. But again, we'll see. News trumps the charts. Okay, Dow Jones and transports. As you can see, we have divergence from the transports, which is our leader of all the indices that we show you. And you can see we're making new highs. We are not even close to making new highs here in the transports. Dow theory is in question, so I would be careful with that as well. And you can see transport's really not doing anything here. Russell 2000, here's the free video, free levels for you guys. A lot of calls, so there's a lot of interest in the Russell 2000. My point is that I love the Russell 2000 long. If I'm going to buy any index, I'd buy it long. I would not buy the Russell here long, especially not moving up here that far, that fast. Now, we did consolidate, unwound a lot of that overbought reading, but still, I think if there's going to be a risk off, the Russell goes first and will get slammed before all the other indices. Okay, so watch the Russell. I think sometime later on during the year, I think will be a great buy. Okay, only on some extreme pullbacks. I would not buy the Russell here. And last is going to be the Qs. Same thing, just out of control buying. Remember, this is all driven on sentiment. We have extreme sentiment readings. Okay, as you can see, the fear greed index is right around 83% right now. If you looked at that CNN fear greed index, take a look at it, guys. Follow it. It does the components. Again, whoever did that is brilliant. I have to say, that is a true good reading. We're on greed right now, and that's telling me that it's only a matter of time. Okay, we just have to be on our toes and be alert here. Pay attention, because at one point Trump could say something that the market does not like, and the next thing you know, this whole trade is over. Okay, have a great day. We'll see you tomorrow.